Welcome in traders. We're going to do a market review for today's trading session. We are currently looking at ES and the time frame we are looking at is the 2000 tick chart. Now, I solely rely on price action and trend lines to look for high probability setups, and the only other supportive indicator I use is the 21 EMA, which is this purple line. Now, as you can see in the pre-market session, we had a nice uptrend with a consistency of higher highs and higher lows. And starting from the lowest pivot, we have about one, two, three price swings total, where we have a nice uptrend holding above EMA with minimal pullbacks. Now, as soon as we got close to the market open, price did start going a bit sideways. We had some deeper corrections. And once I saw this, I did definitely keep a range in the back of my mind because price is going in the middle of EMA. Prices over here are starting to overlap. So this uptrend, I will keep it in the back of my mind, but it's not my priority. Also, I found the support here, which is that low of day of the pre-market, and we're just going to have the high of day, and we're going to see if it is going to turn into a range. We're going to wait for the bell to open and see how the market reacts. Now, close to the open, this trend had a break and a new low. Now, once we had this, what we're looking for is a reversal pattern. We're looking for a failed second entry short. This is only the first failed second entry short or a higher low, but we would want a reversal pattern, not a higher low alone, just to confirm that this reversal is going to happen. We didn't have that, and we ended up just having a nice uptrend in play. Now, once I saw this, I expected price to make a new high for this bigger uptrend. So I was anticipating a long position. So what we're going to do is we're just going to draw the corrections because we have to make sure the downtrends play out before we take any long positions, right? So this had a break in a new low. So what I'm looking for now is a higher low above EMA, and we didn't have that. We just had a strong push with momentum, and we broke and we made a new high. Now, if we had a higher low, a candle that triggered lower than the previous one with a strong close above the EMA, I would have took it. Now, this bigger uptrend didn't make a new high, but sometimes an attempt is enough, and especially because of this big uptrend, it broke and made a new high. I was still waiting. Maybe bulls are gonna attempt to make a new high for the bigger uptrend. So this is an area where I just waited it out, and slowly but surely we ended up having a big spike down. So once I saw this, I definitely recognized that we're in a trading range, and this was the type of market that I was looking to trade, right? So now we're just going to focus on the recent trends. We're going to forget about the big uptrend and we're just going to look to sell high and to buy low, right? So we had this downtrend in play. We had a break of it in a new low. So now we're pausing to look to take a short. Where are we now? Well, now we're bouncing at the support. So what are we expecting? We're expecting prices to reach the top of the range because we're in a trading range, right? So once I saw this, I drew an uptrend like this. We had a bit of overshoot, which means it is being overbought. So we can definitely predict or anticipate a stronger correction. So we're going to have to wait for extra confirmations. And just like any other trade, we have to wait for the bearish correction to play out. We had a break and a new low for this bearish correction, right? So now what are we waiting for? We're waiting for a higher low above EMA, right? So when you're looking for a higher low, like for instance, this is a higher low right here, right? But the issue is, well, number one, it's a bearish candle. You would definitely want it to be a bit more of on the bullish side, but you also want it closer or right after the initial push and reclaim above the EMA. This happened after the break and the new high, so this would have been too late of an entry. But let's say it formed around here right after the initial push above the EMA, I would have taken a higher low for a long position. So now this had a break and a new high, right? So what do we expect now? Well, in a healthy trading range, we would expect price to reach the top, right? We would expect it to reach the resistance. But what instead happened is we had an additional push lower, right? So now you have to shift your mind and think, okay, why aren't we reaching the top of the resistance and why are we going back down, right? This is definitely, it has some bearish um, imbalance going on, right? Because we're not reaching the top of the resistance. So as you can see, we had a strong push below the support. So now we are looking to uh, take a short position if it presents itself, right? Now, At first, I had because we have to wait for the bullish correction to play out, and I was waiting for a second entry short at the EMA. So counting from this low, right? We have a new low, first entry short. I was waiting for a push and a second entry short at the EMA, right? We never had that. We ended up pushing higher and higher. So once I saw that, I thought, okay, this is going to be a failed breakout, which occurs. You know, most breakouts will fail, especially that we have a support and we're going to drag it a little lower. Sometimes, guys, when we break the key levels like a support or resistance, it can fail. And usually when it fails, you can tell because it's a huge reclaim, a huge explosion. And that's exactly what happened here, right? So we're going to forget about this downtrend and we're just going to focus on the new uptrend, right? And we're going to expect prices to reach the top of the resistance. So I ended up drawing an uptrend like this, right? And what I was waiting for is to see if price corrects and we can get an entry. Same thing here, no entry because we ended up breaking the trend line and making a new high. So once you have a trend line in play, it's active until it breaks it and we make a high higher than the previous, right? So this uptrend was definitely active, but once we broke it and we made a new high, now we have to pause looking to go long, right? So then over here, price started to go sideways. Whenever you see the EMA going flat, price is starting to overlap, not a clean trend. Like this down here, right, is a clean trend. You see this down, this nice spike down, it's a clean trend. But once you see price in the middle of EMA going back and forth, you can anticipate a range. So there can be a range within a range. It's definitely possible and it happens all the time. And the more you do this, you just automatically and subconsciously start registering it. So once I saw this, I was anticipating a range, and we're just going to draw like a little mini range here. And what we're doing is we can just play the shortened channels, right? So here we had a break and a new high, and we did start going a little bit higher and higher. So once I saw that, you can start looking for wider alternatives from where the move started. The move started down here from this bottom pivot. So what I did is, and this is the widest I could draw it, and let's actually draw it a little bit smaller so we can just capture this move. So I actually had it, how did I have it? Oh, I had it like this right here, right? Kind of like a spike in a channel. And we ended up having a break. There was no entry here, right? Because if we were looking for one, well, let me show you guys this so you can see it in a better way. So we ended up breaking below the trend line, right? What do we expect? A new high for it. But there was no entry. We're going to draw the mini corrections. We had a break, a new low for it right here, right? And what are we waiting for here? We're going to wait for a higher low. We never got it and we made a new high, right? Now, over here, we did get a lower high, pardon me, a higher low, but the only issue with this is it formed after the initial push up. Remember how I mentioned before, when we're waiting for a higher low, we want to capture it after price pushes above the EMA, we reclaim before the move happens. Reason being is if you go in too late, you might get caught in a longer bearish correction, right? So because it formed too late, once again, it's too late to take it, and we ended up breaking and making a new high for this uptrend, right? So what am I thinking now? Well, since we had a break and a new high for the uptrend, now the bull and the bullish channels played out. We traded down into this range a bit, and now we are at a resistance, right? That is failing. So what I'm thinking right now is I want to see price push below EMA, and we're going to look for a reversal pattern, right? And this was a good indicator too. We pushed below EMA, pushed back up, got near the resistance, failed again, almost like a double top, and now we're waiting for a reversal pattern. And we had this here. This was my first trade of the day. So counting from this new high, we had a first entry long, right? It triggered higher than the previous candle and it failed, right? And it fails when it triggers lower, when the signal candle triggers lower. Then we had another push higher than the previous candle and it failed, right? So this was my first entry. Um, I saw in one of my comments somebody asked me about my stop loss. So my stop loss goes a quarter or 0.25 above my entry candle. So this is my entry candle. So we would put the stop loss a quarter above it. So let's say for instance, this is 7307.25. We would put it at 7307.50, right? And as far as my target profit, it all depends on the ATR. So when you go on whatever platform you're using, you can go to indicators and you can look for something called ATR, right? And what the ATR is, it's the average trading range. And for instance, today's was at 5, which is pretty high. The market's definitely been super volatile. Max I go is 4 points profit trading ES. You don't want to go more than that, especially when you're trading more than one contract. But let's say, for instance, the ATR was about 2 points today. You can go for 2 points, or you can go for the recent low, depending on the type of channel or the type of market we're in. But I base it on the ATR, so you guys can find that on your charts. But let's say, for instance, this was the low here. My target would be around the low, maybe a little bit higher than it, just so I can get filled. But if we're in a range like today, I would just go for whatever the ETR is by a little. So, like, for example, today the ETR was 6. 4 is my max limit for profit. That's what I take. So I just set it for 4 points. Okay, if that makes sense. All right, now let's continue with the lesson. So now we ended up pushing lower, right? Oh, let me draw this a little tighter. We ended up pushing lower and we made a new low. Okay, this downtrend played out. Why? Because we ended up breaking above it right here and making a new low. So now the downtrend played out and we are at the key level, the support. And as I said before, most breakouts will fail. So what do we expect now? We expect prices to go back up to reach the top of the key level. And slowly but surely, that's what we did. If you guys did draw it a little wider like this, I see why you did, but you have to draw um, your channels according to the geometry, if you want to say, of the candlesticks. So, like, for instance, if you draw it wider like this, you're missing out here. You're not getting any confirmation touches of these candles, right? You want to get as many confirmation touches as possible. So when I draw it tight like this, we have one, two, multiple confirmations, compared to drawing it like this, where you're not really getting confirmation touches here, right? Of these small pivots. So you want to draw it, with as many confirmations as possible. So we had a break and a new low. All right. Now what do we anticipate? We anticipate prices to reach the top of the range. Now, this was a huge spike in a channel, and the reason being is we had news, we had a catalyst, which was a positive one. So prices just went up. It pushed about 100 points. So what do we do now? Okay, we are definitely thinking bullish, but once you see a strong spike and it breaks the channel, right, and you have overshoot, which means it's overbought, you have to take it easy, especially when it's a huge spike in a channel, over 100 points. You can't look for long positions right away. You want to see price correct, right? Um, Especially when you see it starting to go sideways. This is an indicator that the correction still hasn't balanced and there's an imbalance, right? Whenever you see a huge spike like this, take your time, don't rush the setup, right? You want to see price at least correct below the EMA a bit, have some trend lines drawn where it's an obvious downtrend that played out. So here we just started going sideways. And let me get rid of this so you guys can just see things a little clearer, right? So it is respecting the EMA, but like I said, the correction didn't fully play out. So once you see it go sideways, draw a small range, right? Just so you're not buying too close to the resistance and you want to buy closer to the support, right? Now, I did take this setup right here, and was it the best setup? No, we're going to make it yellow because it wasn't the best setup. Green is usually an A1 setup, so we'll make it a little yellow. Reason being is, like I said, I should have waited a little bit longer for the correction to play out. The reason why I liked it is because it was respecting the EMA. As you can see, price didn't break the EMA at all. And like I always say, the EMA is like your compass. And if price is respecting it, there's a really good possibility price is going to have a strong continuation and the bears are going to be exhausted, right? So once I saw this, and I'll show you guys how I counted my entry. At first, I drew my correction like this, and then we started going sideways. I got rid of it. And what I did is, counting from this high, we had new high, first entry long. This is the first candle that triggered higher than the previous one. Pull back, right? Because you need the pullback to reset the count. Second entry long, right? Then we pulled back again, and this was a double trap. And not only is it a double trap, it's a multiple test. And we'll make this line green so you guys can see it clearly. And as you can see, it's just a super strong support that's holding. You have one, two, three candles holding. You have the EMA holding as well. This is what gave me the confidence to take it. And it's a double trap. It trapped the bears twice, so you don't even have to worry about a stronger pullback. And as you can see, we ended up pushing higher and higher, right? This was my second trade of the day. Once that happened, and whenever you have a big push and we have a break in a new high, you can either expect a continuation, a reversal, or a consolidation, right? And that's exactly what happened here. Let me just get rid of this. We had a big consolidation that was taking place, right? So once we break, we make a new high. What I recommend is looking for a resistance, which is usually the top pivot where the move or the down or the strong downtrend occurred. So you can draw it here, and you can draw the support where you have multiple confirmations or where the move started initially. So this support, this is where the strong move occurred. So this would be the support here. Now, this is the same thing. We're in a range. So what are we going to do? We are going to follow range rules. Like I mentioned before, we're going to buy low and we're going to sell high. But because we traded up into this trend, we're only looking for long opportunities, right? So we had a correction here. After we had a break and a new high, we're going to draw the corrections. We had a break. This downtrend had a break and a new low. We're not looking to take any short positions because we traded up into this range. And if you even measure it, it looks like one leg down. And let's make this yellow so you guys can see it clearer. And we had another leg down. So we had a two broad moves down, two broad legs down. You can't even draw it any wider. So this negates any wider or any um, wider downtrend. So now we are looking for long opportunities. And not only that, we're bouncing off of the support. So now we have almost three confirmations, right? We traded up into this, two legs down, the downtrend played out. We're bouncing off of the support. So what are we expecting now? We're expecting prices to reach the top of the resistance. So what I'm looking for here is, well, I personally wanted a reversal pattern because this is the beginning stages of a range, right? So counting from this new low, we have a new low. First entry short, right? This is the first candle that triggered lower than the previous one. It failed. So over here, I was looking, right, after the push above EMA. I was looking for a failed second entry short, but we never got it. I was looking for a candle that triggered lower than the previous one, failed, so we can take a long setup, right? So we can touch the opposite key level. So we can touch the resistance. We never had it. So what we're going to do is we're just going to draw the small uptrend. And sorry, this was from earlier when I was trading. I never really took it off. So we have an uptrend here. So what are we looking to do now? We're looking to take a long opportunity. But as I always say, you have to respect the small corrections. We had a downtrend here, right? We never made a new low for it. But what I was looking for here initially, you don't always need to make a new low. You can do two things. You can wait for price using the Fibonacci to retrace the 60%, or you can wait for a reversal pattern, especially when it's just a small break off the EMA. We're anticipating price to reach the top of the resistance. So this right here was the first failed second entry short. But what are we looking for? We're looking for the failed second entry short, right? Not the first. We're waiting for two failed short entries before we take a long. But the issue here is EMA started going flat. Once you see overlapping candles, no space, EMA going flat, we're now forming a small mini consolidation. And this is an area where you can do two or three things. You can wait for a breakout above the resistance or out of the range and wait for, and then once it pushes above higher, you wait for a higher low at the EMA, or you can wait for price to break below the support, fail, push above the EMA, and we get a higher low. None of that happened. We just had a strong momentum push, and we ended up breaking and making a new high for this uptrend. We touched the top of the range, right? or this resistance. So now we're pausing to go long, and slowly but surely, and this was about 30 minutes before the close, so some volatility kicked in. We ended up trending higher and higher. And just for educational purposes, I'll show you guys how to draw a trend like this. I had mine drawn like this, just so you guys can learn how to draw spikes and channels and trend lines accordingly, right? And for anyone who's wondering, when do I draw a wider channel? Well, I like to look for 2 additional pushes after the newer high. There's obviously more to it, but for beginners, we had a break here, remember, for this uptrend, and we made a new high. Wait for 2 additional strong pushes. So this would be one right here, and this would be 2. And as you can see, price is just not correcting at all. The bulls are just pushing, the momentum's there. Once you see that, start from the bottom pivot where the move happened and align it geometrically with the candles and try and get as many confirmation touches as possible with as minimum space. So as you can see here, counting from this bottom pivot, we have 1, 2 confirmation. It fits great. It almost aligns with the EMA. So this is an area where you can only, or where you can just focus on taking long positions, right? And unfortunately, this was right around or 20 minutes before the market closed. There was no setups at all. And you guys have to remember, 30 minutes before the close, be extra careful, especially when price is very volatile, because you can have a very strong profit taking, right, in a correction, So that's usually what happens. So I would definitely recommend avoid trading within 20 or 30 minutes before the close, and that's exactly what happened. We kind of just had a strong correction, some profit taking, and then the market closed. So that was the trading session for today. Now, for anyone who's new in your trading this week, the market's been super volatile. So if you're a beginner trader, I would recommend sim trading or just watching and getting your screen time in, because the market is very volatile, a lot of price swings. The ATR is super high, and it's definitely more intermediate to expert level, but it's definitely good to get your screen time in. It just makes the process faster, and it just takes time. Once you guys wake up, you get your screen time in, you just automatically and subconsciously start registering these. It may become, or it may look hard in the beginning, but believe me, if you're dedicated and you put the time and the hours in, it will almost become like second nature, within time. And all these patterns, your brain just starts recognizing them almost like a computer. So take care, guys, and I'll see you in the next video.